If somebody else is doing your taxes, you want to review it with them and be like, hey, where's the 199A deduction? And if it's not there, and if they don't know what you're talking about, you got a problem.
Hello and welcome to the Wholesale Made Easy podcast, where we believe selling on Amazon shouldn't be hard, and we're going to prove it. My name is Dylan Carter, and I'm one of the co-founders at Vendrive, a tool that helps Amazon wholesale sellers streamline their businesses, stay organized, and land more profitable accounts. I'm sitting down with other successful wholesale sellers, and together we're sharing lessons learned and what it really takes to succeed with wholesale. Today's guest is Mark Tu, who is a CPA and founder of NotYourDadsCPA.com, where he helps e-commerce business owners navigate the seemingly daunting world of business taxes and financial planning. In this two-part series, Mark helps us break down what you should be doing from a financial standpoint in your business, how to handle sales tax, and even reduce your tax liability with deductions. If you want to use any resources that Mark and I talk about on this episode, you can find them at vendrive.com/podcast/Mark. Cool. All right, we're just going to jump right into it. So walk me through how sellers should, one, understand sales tax and two, approach it.
Yeah. So, I mean, sales tax is, I think everybody knows it's kind of a mess, especially right now. But I mean, you just got to back up and start with the basics. So, I mean, the first thing to remember and the thing that's been in place historically is the concept of physical nexus. And nexus just basically means where you have a physical presence. And that could be where you are physically in your business, or where you have a warehouse or an employee or an affiliate or something like that. That would give you a physical presence or nexus in that state. So typically sales tax, it's imposed by the state or the county, sometimes the city, sometimes they're all combined. But the rule is that you need to collect and remit sales tax anywhere where you make a sale, where you also have that physical presence. So for most of us, that's just our home state. If I live in Nevada, I make a sale in Nevada, technically I should be collecting sales tax and then passing that sales tax along. So one thing to remember is that even if you're not collecting the sales tax, like, the state doesn't care. They're still going to want you to pay it. So that's just money out of your pocket, cutting into your margins. So it's a good idea to be collecting that. So the complication there with Amazon is, anywhere you have inventory stored in one of their fulfillment warehouses, that technically gives you physical presence in that state. And that was kind of like a question for a couple of years. I think people were asking, well, does having a fulfillment warehouse give me nexus? And nobody really was saying anything, but the consensus is that yes, it does. So if I'm based in Nevada, I have inventory in California in a fulfillment warehouse, and I'm making sales in California, then I should also be collecting and remitting sales tax on those sales. So that's kind of the first step.
Yeah. And I know that was like the biggest question, and the biggest argument was, well, if my inventory is on a truck and it happens to go through Colorado, do I have, people kind of ran with this logically, like, oh, well, if it physically touches, the border of any state, then does that mean I have nexus? And that's not really the case. So I guess the hardest part for a lot of people, especially when this became a big issue, was how do you define physical presence and nexus? So you're saying now across the board, it's pretty much, listen, if you have a number of inventory in a physical location at a fulfillment center in a state, and you're making sales in that state, you have nexus there.
In general, yes. I mean, you're never going to get 100% consensus with 50 different states, but that seems to be what's accepted. And one thing to remember there is there are also distribution centers and sort centers. And from what I've read, those would not be considered nexus. There might be some people who disagree with me on that, but you'd want to distinguish if your inventory is at a fulfillment center or a distribution center. And here's the other thing. So like Amazon, they don't make that information readily available. You can pull reports where you can see the fulfillment center codes, but then to my knowledge, they still don't have a chart that shows what that code, what fulfillment center that code is associated with. So you like have to Google those one by one, or I also found a pretty good list the other day that a third party has. But I mean, they don't want you to know that because that'll eventually just create more work for them.
Yeah, that makes a lot of sense. I know doing that myself, going through this process, I'm like, there's no way there's not a good tool that just does this for you and just says, hey, here's the 5, 6, 7, 12 states you're in. Do what you need to do. It's no, here's a bunch of codes. And then you Google them and then you have to find out, okay, that's in that state. Okay, I'll do this then. And you might have, 2 or 3 fulfillment centers in the same state. So it's like, okay, now we got to, collate that over. So it's really tedious. That's the hard part. And I think why a lot of people try to argue against having a nexus somewhere, because they just don't want to do the work, which is understandable. Like, it's not enjoyable to do. And you're talking about, paying a state money where it's like, do I really need to do that? Like, I don't want to. So I get it. Yeah, it's not fun. And you mentioned you found a resource that was pretty good.
Yeah, I will. I'll send you the link.
Okay.
But yeah, but I could tell that they didn't have everything. I mean, all I wanted was like a simple spreadsheet that I could do like a VLOOKUP in Excel and like, match it with my Amazon reports. I mean, like they do have like services like TaxJar, and they pull all that stuff for you. But of course, that's, they can be pretty expensive when you're dealing with a certain number of states. But yeah, it's just crazy. So especially for beginning sellers, like they have no idea how to pull Amazon reports and how to go in and see a fulfillment code and then how to Google each code and then, go register for sales tax in all those states. So obviously they're not registering for sales tax in those states. But I know that so I talked to a seller based in Nevada, an Amazon seller I think he does like 800,000 a year now, but he has never registered in other states. But California, I guess they subpoenaed Amazon for a lot of that data, and they're sending out like a batch of 50,000 letters to people saying, hey, we know you have inventory in a fulfillment warehouse here, and you need to register for a sales tax ID and pay all your back taxes.
Yeah, there's this whole big ordeal of being a subpoena, all this like grace period of like, hey, if you just register and get on the right track, we won't come for you for back taxes, basically, which is like the scariest thing. So when they started sending those, everybody in every Facebook group, Instagram's like, oh my God, what do we do? So me not having a CPA or CFA, anything, registered, not an expert by any means, from a seller standpoint, I get what you're saying. It's one, for the majority of sellers, it's such a small amount that you're talking about that the state coming for you is relatively low. Let's just be honest about the logic here. Does that make it the right thing? I don't know, to be honest. I think we're still in that gray area of, well, there's what the state would like you to do, and then there's probably what you don't want to have to do. And yeah, you might be able to get away with it or you might not. I think it really can be a gamble for a lot of people. Obviously, the bigger of the larger amount of revenue you're doing, let's say, especially if you're over the 7-figure and really over like $500,000 in sales, you have an asset that is at risk, right? Now you have liability issues where, yeah, you should approach that vastly different than a seller doing 50 grand annually in sales, right? Because it's such a smaller amount that you're talking about versus a seller doing 7 figures.
Right. Yeah. And someone could argue like, I had no idea I owed these taxes. Nobody told me this. I couldn't find it anywhere. And now you're telling me I have to go back and pay for 3 years. So at a minimum, I would look at that and maybe register in those states going forward and, see if they continue to send you letters about back taxes, because I don't think they have that data. I think they just have your name on a list maybe, and they want to see what you pay in the future so they can go back. I don't know.
Well, I've seen some states basically send something like that. I think it was Texas that did it to me. And they're like, oh, well, just, pay us this amount. I'm like, why is it exactly 2,000 flat? And you read the fine print on the paper and they're just like, no, just pay us, basically. Like, we don't know what it is. Just pay us. It's like, that's
Right.
not
Yeah.
how this works, you know? But some people are going to see that and be like, oh, crap, okay, and just send it over, right? Which ethically, to me, I think is a major issue, especially from a small government standpoint. That's outside of the scope of the conversation. But yeah, it can be confusing and it can be very unsettling because it's slightly scary because it's taxes.
It's definitely a debt collection tactic. I mean, they're all guilty of like sending out these inflammatory letters of like penalties you owe and stuff. And then once you say you're going to pay it, they're like, oh, okay, we'll waive the penalty for you. But yeah, and anyway, that's the concept of physical nexus. Like it wasn't already complicated enough. But then, I mean, if there, so recently with this Supreme Court ruling that a lot of us have at least heard about, that introduces the concept of economic nexus. So you don't have to have a physical presence in the states now for them to charge you sales tax if you exceed a certain level of sales or like sales in dollars or sales transactions. So that's a huge complication, you know, depending on what your level of sales are.
I think we were all hoping that would go the opposite way.
Yeah.
But, you know, when you mix government with new technology, you know, new economic activity, things can be super convoluted and complex. And unfortunately, it went that route. You know, that could be a good thing, though. You know, it's easy to just assume that it's not. Them measuring economic activity per state, that's so complex. I'm just thinking of like logistically how they can do that effectively. And I can't imagine the storm that's going to bring.
I don't think they can enforce it, especially not how it is right now. I mean, it's going to be a painful next few years for everybody until, I mean, in my opinion, you know, they're going to continue to force the retail or the platforms, Amazon and everybody, to collect it for us, and then they can just get it all from one place.
So they're really making a bet on Amazon on places, well, platforms being, you know, Walmart, Jet, and eBay, of course, too. But yeah, like you said, they're going to have to basically bet that entire infrastructure on Amazon's being like, yeah, okay, we'll do that.
Yeah, I mean, they already kind of forced their hand in Washington, Minnesota, and there's a few others on the list coming up. So
interesting times in the world of e-commerce.
Yeah, and it's funny because some people are gonna comply with every rule, which is great, and they're gonna pay a ton of money, and other people are just gonna ignore it all, and they'll never be caught. So it'll never be fair.
Yeah, I go so back and forth with that kind of judgment of, well, should you just do everything because you're asked to, or should you say, yeah, these matter, but these, just because you say, you know, not like evading taxes by any means. That's absolutely not what I'm saying. But, you know, there's things where it's like, that's clearly gray area right now. Like, should I just dive into it full force or kind of fight against it? I don't know. I'm not making any suggestions by any means of what you should or should not do. But it's an interesting conversation in topic for me personally, because I'm a very clear cut person. I do like things that are very black and white when it comes to rulings and how you play within those. So when it's not there, it's like, well, what do I do? So it's really confusing.
Yeah, I mean, in this, it is really confusing, and for a lot of people, they just freeze up and they'll do nothing. So that's why I tell people, at a minimum, you know, just go register in your home state, and that'll get you started. You know, start collecting sales tax in your home state for those sales, and you know, you get your feet wet and go from there.
Especially with wholesale, I mean, that's like step number one. You pretty much have to have a resale permit or sales tax permit either way. So it's like you're going to do that minimal to get an account, because that's just the way the applications work when it comes to wholesale. So that works out nicely. I would imagine the majority of our listeners have at least that, which is good. But don't try to skate around it. Don't just be like, we'll let them figure it out. I'm going to do nothing. Like I would never suggest you to do nothing, but definitely, you know, keep on top of what's coming out as things change, because unfortunately they're going to continue to, and they're probably going to waver a little bit in the next 5 to 10 years. So it's going to be interesting. So having a physical nexus, that helps a lot. I know it's been thrown around a lot, but it's good to have a good understanding of how to define that. Today's episode is brought to you by GoAura.com, our AI-based repricing tool. If you're ready to take your sales to the next level, repricing is the way to go. No more manually adjusting your prices each day. Let our AI actually do the heavy lifting for you. And if you're sick of repricing tools dropping their activity and leaving you in the dark, Aura can help. With smart repricing strategies, an optimized platform, and instant repricing, Aura both reprices faster and holds the buy box for 65% more time than competing repricers. If you're ready to experience repricing reimagined, head over to goaura.com to start your 14-day free trial. Let's move over into deductions, and let's get away from the scary stuff and get to the fun stuff of how to lower your tax liability, which is always a fun topic in business.
Yeah, I mean, deductions, a lot of people don't realize how much you can deduct to offset your income in your business. And I mean, especially with the tax changes of this past year, one that I'll start with, because it's so massive and so many people probably don't even know about it. It's the Section 199A deduction. It's also called the flow-through deduction. And it's basically just a 20% of your net income deduction. So it's 20% of your qualified business income, which is basically your net income. So if you net, say you have a good year, you net profit of $100,000, you get a write-off an additional $20,000.
So it's an addition. So it's not 20,000 of the 100,000. It's 20,000 of 120,000. Is that correct?
Well, yeah. So before this deduction, let's say you're at 100,000, you get to deduct 20%. Well, no. So say you have a Schedule C, you'll show a net profit of 100,000, and then you get to carry a $20,000 deduction to the face of your 1040. I mean, that's massive.
Yeah, that's absolutely massive. Especially, I mean, not obviously like at scale with huge companies that matters tremendously, but even small companies, that's huge. Especially if you're only doing, like you said, $100,000 in annual net profit. That is huge.
Yeah. And I mean, there are obviously a lot of like qualifications and stipulations and stuff for different professions. But for the most part, I think wholesale, it should be pretty straightforward, 20% across the board. So, and it's good to know about it. If you're doing your taxes, so you can make sure you get it. If somebody else is doing your taxes, you want to review it with them and be like, hey, where's the 199A deduction? And if it's not there, and if they don't know what you're talking about, you got a problem.
You should make another phone call.
Potentially.
Yeah. That I didn't even know about that. That's fantastic. There's so much, even on the basic level, but adding that into the mixture is incredible. Because I know a lot of our audience works from home. A few of them, there's a percentage that do have their own warehouses, but a lot do work from home. Can you go through some of the advantages of basically doing that?
Yep, that's a good one. So, I mean, if you work at home, and especially if your home is your primary office, you should be taking advantage of the home office deduction. And there are two different methods you can use. One is the simplified method. One is the regular method. And you just want to use whichever one is more optimal for you, because depending on the size of your home, depending on your different shared home and business expenses, it'll give you a different result. So just real quick. So the simplified method, basically you get $5 per square foot of your home office up to 300 square feet. So that one maxes out at $1,500. But then with the regular method, it takes into consideration your different shared expenses, like your mortgage interest, your property taxes, your utilities. And then it just takes, the proportion of your office to your house. If it's 30%, you'll just basically take 30% of all those expenses. And, especially like if you're paying rent for your house in California or something, like that method can yield a lot higher deduction.
So being aware of your situation matters a lot, as in everything. Does that include, let's say I have a home office, but I also prep and ship inventory from my garage. I understand there's a cap, but can I use two different locations in the same home? Does that work as well?
Yes.
Okay. Because I know a lot of our users in audience, when they're getting started, they don't want to go, set up their own warehouse quite yet. So they end up just converting the garage basically into a mini warehouse, and not parking their cars there. You know, it's fully set up as a mini warehouse.
Yeah, and I mean there are rules with the home office deduction, like it's supposed to be you're supposed to use it regularly and exclusively for work, so it can't be like a bedroom in most cases. But there is an exception to that. Like even if you don't have a space that you use exclusively for work, inventory is an exception to that. So if you store inventory anywhere in your house, that square footage, for the most part, automatically qualifies as square footage for the home office deduction.
And there's a few people that I've seen on Instagram that literally pack out their entire living room, like floor to ceiling, with boxes when they're prepping. I'm like, maybe it's time you get a bigger garage or your own mini warehouse, because I think you've maximized this space.
Yeah, yeah.
So that's good to know. What are some other ones that we really should be aware of that may even seem trivial and just super basic, but really can have a profound impact?
Yeah, and these are good because, I mean, a lot of us, I mean, do have, well, so a lot of us don't have bookkeeping, but even those of us who do, a lot of those expenses that are imported into our bookkeeping systems, we have those. We know those are going to be deductions, but there's a lot that goes into the tax return outside of that. And these two deductions we've talked about so far are part of that. And another one would be that people often miss would be mileage. So anytime you're out, sourcing or, traveling for business as a self-employed person, you should be recording that mileage. The easiest way is like with an app, like MileIQ or something. And just making sure you're tracking that business mileage, because at 50 something cents a mile, that really adds up. And, there's so many people who just don't track it throughout the year and don't even think about it. And then I'll say, hey, what about your mileage? And we'll figure it out and add it back in, and it can reduce their taxes by, up to thousands of dollars potentially.
Yeah, I've done that every year for the past 5 years because it adds up. And especially using a tool like MileIQ. Is it Mile or Mileage IQ? I can't remember. Mile, that's right. Where basically you can essentially train the app to know when you're driving for work versus not. It can pick up some patterns there, or even just you quickly go through and categorize it. So it's a quick, efficient way to log that. And then once tax season comes around, you have that report ready to go versus having to go back and say, well, did I do this? How many miles was that? It's ready to go. So it's pretty streamlined. And like you said, it absolutely can add up.
Yep.
So what about going to things like trade shows? So let's say I fly to Vegas for ASD. That would be a travel expense, correct? That I could potentially write off?
Yep. I mean, if your primary reason for the trip is business related for the show, yeah, you can write off that whole plane ticket, all your rental car fees, your meals, the cost of the ticket, for the show, all that stuff.
There's got to be so many people who just go to dozens of these every year and never write off a single one. Like, why is this so expensive?
With all the shows that people go to, I mean, they could be even like generating a tax loss, which, but instead they're paying taxes. So it's a good one to remember.
Yeah, that's helpful because I know a lot of people do travel, even if it's for a conference, right? What about knowledge in the sense of, paying for a course, learning how to scale, a mastermind group, something along those lines where it's more knowledge based. I would imagine that could still be considered tax deductible as a cost.
Yeah, I mean, that's one of my main selling points with my course that I just came out with. It's not very expensive in the first place, but I'm like, it's 100% tax deductible, assuming you have a reselling business that you're working on. Because I mean, it's basically a tool. It's like information that you're purchasing to put to work in your business.
And that even works for like our tools, right? So we have Vendrive.com and GoAura.com. Those can be written off. So It's interesting because when you're looking at expenses or buying something, like I had to do that with my laptop because my desktop finally failed after like 8+ years. And I was like, all right, I have to go get a new one. And I'm looking at the cost and I'm like, man, I need it. That's how we run our companies, but it's a lot of money. And then I thought about it. I was like, well, am I really paying full price for this? When you consider in the deduction of it, I'm paying far less than it would seem I am because of that deduction. So when you're looking at costs, it's not just this costs $100. Well, it's that less the tax deduction. So actually you're not paying as much as you think you are. So you can view these costs and expenses a bit differently than you normally would.
Yeah, I mean, depending on your tax bracket and all that, like it could be basically like a 35% discount off the price that you're seeing.
Which is kind of nice. So for everybody asking for coupon codes and discount codes, you got one built in.
I know, exactly.
As we raise our prices. Just kidding. Yeah, no, that's really interesting because it does change your perspective. I'm a big fan of whether it's a framework or methodology, whatever you want to call it, a process that can shift your perspective on how you view things within business tends to have a profound effect on the majority of people because they get to see what I would say, quote unquote, behind the curtains, behind the scenes of business that they're not typically exposed to or not necessarily not as excited about, I would even say, because it doesn't seem exciting. Like we were talking about on the previous episode, it's like, you know, insurance, taxes, a lot of people don't get as excited as they should until they start to understand how it works in the positives and opportunities that are present. And then this whole new world opens up and you're like, wow, okay, this is way different. There's a lot of opportunity here. So are there any ones that we've missed that are really top of mind for you when it comes to deductions?
I mean, there's a huge one, and it's probably obvious to, you know, to most of your wholesaler listeners, and that's just your inventory, your cost of goods sold. I mean, and that's probably their biggest one, I imagine. And it's just such a big part. It's just you don't want to mess it up. Like you don't want to just wing it or try and keep your inventory in your mind or something like that. Like you got to track it so you can have that and not stress about it and just be able to take full advantage of that entire deduction and get it right.
Somebody somewhere is like, wait, you can do that? They've been filing the taxes themselves for the past 3 years. Like, oh my God. Fun fact. Yeah, no, that is a huge one. I'm glad you brought it up because again, it's one of those things that it's so simple and basic, but still needs to be talked about because there's somebody somewhere who's like, wait, I can write off the cost of my inventory. Yes, you can. That's great. So, you know, I like using a tool like Inventory Labs where I can easily generate that report come tax time. I have the report. I'm good to go. I can see everything from a nice high level and be accurate too, obviously. So yeah, that's a huge one. And there's a bunch of little ones like uniforms if it applies. All kinds of stuff. Actually, there's just a long running list of things that can apply to you that are super situational. I think that's for a lot of people why it gets a bit cumbersome and tedious sometimes.
Yeah. And two that a lot of people forget about, especially when they're working from home, they usually fall outside the home office deduction. And those would be your cell phone and your internet. Because I mean, so many of us now use our cell phones so much for work. I mean, maybe we use it 70% for work, you know? So basically you would just take 70% of your phone bill and deduct it. It's as simple as that. And the same thing goes with your internet.
Again, little things but when you start stacking all these up together, it adds up to so much money saved. And like you said, you could find yourself in a negative situation, negative, not meaning like negative situation, but like
right.
You actually, you know, are positive when it comes to your tax returns, right? So it's, yeah, you paid in quarterly, but you're actually getting money back, which always a good thing. I'm always happy if I could just break even when it comes to businesses and the tax side of it. But getting money back is always a very nice thing to experience. Doesn't happen as often as you would like. So
right. Yeah, that one depends on your mindset. Like me as a CPA, I'm always like, I want to hit it right on. I don't want to pay them any more, you know, than they deserve. But
it can be a challenge. I mean, I don't think it's a bad thing even for non-CPAs to kind of have that mindset. Obviously, like there's being optimal and then there's optimizing to such a granular level that it's just not yielding anything positive after. But yeah, I mean, like, why wouldn't you, right? Because it's money. And so the time you spend going that route, putting in the effort, research, you know, working with your CPA to do that, can yield a positive return on your time. So why not?
Yeah, I mean, that reminds me of a good point. I mean, that kind of shows the difference between tax planning and just like tax preparation. Because if somebody tells me, hey, I got a $10,000 refund this year, I'm thinking, you're an idiot. You should have been planning your taxes better. You know, you should have kept that money and not paid them so much.
Yeah, because I mean, you're losing on opportunity costs, right? So that whole time you're paying in so much money that could have been compounded with new inventory.
Yeah, and I mean, I mean, I gotta take that back. Like they're not an idiot, but some people just think, well, I kind of use the government as a savings because otherwise I'll spend it. And that just gets into the personal finance side. And it's like,
Mhm.
well, you got a problem there. You need to like a little bit of discipline, like, I don't know, set up a different system.
And they're not giving you any interest on that money. So it's not a good savings account. I promise you that.
Right.
Yeah, if that's your savings account. I was actually talking with one of my professors about this, and they were talking about how some people actively still use their tax refund as their savings. I'm like,
Mm-hmm.
why? That makes no sense to me. I'm a finance major, so I get that, but still, like that's just you getting back what you had already paid in. That's you basically getting restitution, if you will, for basically paying too much, which is never a good thing. Getting a tax refund, yes, it's nice to get that check, but when you think about why you're getting it, that's not a good thing.
I mean, it feels good. It's like,
Sure.
I think you probably have like a surge of dopamine or something. It just like feels good, getting cash. Sure. Even if you paid it like a year ago.
But having that cash like throughout the years, obviously, it's less sexy because, like you said, you're not getting that dopamine hit, but you have the cash the whole year.
Right.
Especially when you start talking, thousands, tens of thousands of dollars, if not hundreds of thousands of dollars, depending on how big your business is.
Sure.
So it's very interesting. Well, Mark, man, thank you so much for breaking down the whole sales tax issue, because that is the most chaotic thing I've ever dealt with in my entire life. Like conceptually, just figuring this out, getting it clarified, and then helping us work through some really major tax deductions that I know there's so many people, including myself right now on the first one, that are like, wait, I can do that, and it's going to save them money. So that's incredible. So thank you.
Yeah, absolutely. Happy to help.
Before we leave, I have a huge ask. If you enjoyed this podcast and you got value from it, leave us a 5-star review on iTunes. The way we're able to have more impact on more sellers is by getting in front of them. We can do that by having more reviews and getting pushed to the top of iTunes podcasts. So leave us a review and let us know what you think of the podcast.